In this video, you will learn about betting exchanges and how to make money trading sports, so stay tuned. You may think, why would you even bet? Why not trade real financial instruments? Here are some benefits of sports trading. 1. It is not expensive, whereas buying a stock depends on the stock price. 2. Betting is usually tax-free. This depends on the laws of your country, but many European countries just require the bookmakers or exchanges to have a European gaming license. 3. You can always make a bet. There are many different markets open throughout the week, so you can always do it. Now let me tell you what I will be talking about in this video. What is a betting exchange? How does an exchange bet work? Why aren't there more exchanges? How do betting exchanges make money? How to make money on a betting exchange? Any way to avoid higher commissions? So let me tell you about a bookmaker first. You might have heard of a sports bookmaker. They provide the odds and markets, and when you bet against the bookmaker. Bookmakers are the most widespread in the whole world of gambling, and there are many different bookmakers like Unibet, Betway, and etc. So what is a betting exchange? A betting exchange allows the bettors to bet against each other, and the most important feature in a betting exchange is laying. Backing and laying are two terms you should know. Backing is betting on the selection to win, just like when you bet on a traditional bookmaker. Laying, on the other hand, is only available on a betting exchange. Laying is betting against a selection. With this feature, the betting exchange itself won't have any losses when someone wins because they don't have to provide funds for the winners. Let me show you an example of how the betting on an exchange would work. So let's say there is a football match between Manchester and West Ham, and the odds on Manchester to win is 2. So let's say you backed Manchester with $10 and you won. Your return would be $20. What about the person who matched your bet, or bet against Manchester on the odds of 2? He paid $20, and if Manchester lost or the match ended in a draw, he would win $10. So as you can tell, it is more expensive to lay a team, since the liability would be the odds times the amount you want to win. Now you might think it would save a company or bookmaker a lot of money if they were a betting exchange, since they don't pay the winner with their own money. However, they make a lot more money by being a bookie. The thing with bookmakers is that they set the odds. A bookmaker usually lowers the odds on the selections. And that's not all. Most people lose money when gambling, and since you are always betting against the bookmakers, in the long run you will lose to them if you gamble just for fun's sake. Moreover, if you are addicted and you lose money all the time, then you are their favorite customer. However, what if you are a consistent winner who has a strategy? The thing with bookmakers is that they limit their consistent winners, and in some cases, they won't pay out large winnings. So if you use a football strategy and you make profit consistently, you are likely to get your account limited. But what does that mean? A bookmaker won't freeze your account, they will just lower your maximum bet, which means the most you can bet on any selection and market can sometimes be as low as $1. So how do betting exchanges make money? Betting exchanges charge commission on winnings. This is usually anywhere between 2 to 8% commission. That might sound great. However, these betting exchanges are still greedy, so if you make money consistently they will charge you much higher commission, sometimes up to 60%. But it is usually the top 10% of customers that are charged with higher commission. So how can you go about making money on an exchange? There are many different strategies on sports trading. Let's have an example. There is a football match between two teams, and you think they won't score in the first half, so what you do is back the draw selection, and later you would lay the draw, and since the draw odds fell in price, you can make a profit. This is called hedging your bet. By doing this, you will never have to wait for the entire match to finish, as long as there is liquidity on both the back and lay side. As I said before, the con with all betting exchanges is that they charge you a higher commission for the winners, and this is true for all the major betting exchanges. However, there are new betting exchanges like XBTfx.io that only charge a fixed 1% commission. XBet is brand new, so liquidity lacks. Also, many sports markets and racing is not available, so if you trade horse races you will have to wait. Furthermore, XBet has Curaçao gaming license, which means winnings are taxable. Another big con is that they don't have any trading software like Betfair's Geeks Toy or BetAngel. And lastly, they are crypto-based, and it is not stable coins, so if you don't want a currency that fluctuates, XBet is not something for you.